Be Wealthy and Smart, episode 1122.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about best and worst luxury real estate markets for next year, 2023. I can't always talk about global topics, but today I can. And I can talk about real estate all over the world. So no matter where you are, we can truly be global with our topic today. So first, the big picture is that the strongest luxury markets are expected to cool a little bit next year. As interest rates rise and economies slow down, real estate consultancy Knight Frank believes prices will rise by an average of about 2% in 2023, revised down from the 2.7% that they projected 6 months ago. They're still seeing that the global wealthy, which appear to be immune from inflation and economic slowdowns, are holding off on big real estate purchases or becoming more discerning on price given rising interest rates. Now, a lot of people are talking about markets coming back into balance. That is, not being just a seller's market or a buyer's market, but being more balanced between the two. But Knight Frank believes the transition from a seller's market to a buyer's market is already underway across most prime residential markets. There are certain markets that have been extremely strong, such as Dubai, which saw prices soar by 50% in 2022. Dubai has had a sudden surge of wealthy residents, mainly from Russia, looking for a safe harbor for their wealth, yachts, and real estate after Western sanctions and the war in Ukraine. Just in October, prices for single-family homes in Dubai rose 13%, and overall sales volume jumped 73% over the previous year in Dubai. In fact, Dubai was at the very top of the list, number 1 out of 25 of the world's top luxury or prime real estate markets, with prices expected to rise 13.5% in 2023, and Miami ranking second, with prices expected to increase 5% next year. The third, fourth, and fifth place markets in the top 25 include Dublin, Lisbon, and Los Angeles, with 4% expected increases for each of those cities. The worst performers next year are expected to be in Seoul, Korea, and London, England, with prices expected to drop 3% for both. New York hung in there right in the middle of the pack at 13th, with prices expected to increase about 2% next year. Although New York's 2% increase that's expected next year is down from 2022, and many brokers are forecasting declining prices in New York next year, especially in Manhattan, Knight Frank said New York will benefit from overseas buyers who are seeking more rather than less exposure to the U.S. dollar as the Federal Reserve ramps up rates. Singapore is the only Asian city in the top 10 and one of only 4 cities whose forecast has climbed in the past 6 months. Singapore is getting a lot of wealth coming out of China as rich Chinese citizens move their money and their families to the island to avoid strict COVID lockdowns and a slowing economy. Buyers that have cash will still be the ones who get the best deals across these 25 markets, as all cash deals are still very attractive to sellers. But Knight Frank says we're seeing political and economic volatility in many countries, leading a flight to safety in real estate, pushing buyers to mature and transparent luxury markets. Many people feel that global luxury real estate is in a state of flux, and that there's 3 key drivers of the market: demand, supply, and price. As far as demand, the global population is growing and becoming increasingly wealthy, and that increase in wealth is concentrated among a small portion of the population that are called ultra-high net worth individuals. They're defined as those with a net worth of $30 million or more, and they're seeking out luxury goods and services, including luxury real estate. The second factor is supply, and the number of properties available for sale at the luxury price point has not kept pace with the growth in demand. In many markets, there's simply not enough inventory to meet what buyers want, and that's resulted in rising prices at a rapid pace in some of the most desirable markets. For example, prices for prime residential real estate in London increased by 22% between 2014 and 2016. That was really before the whole COVID situation, so that was just pure supply and demand differential. The third factor is price. Despite concerns that there's a potential bubble in luxury real estate, demand continues to be strong and prices continue to rise. Currently, the top 5 countries ranked internationally are the United States, home to some of the most prestigious and expensive real estate in the world, such as in New York City, along Central Park, Beverly Hills, San Francisco, etc. Number 2, United Kingdom, another popular destination for luxury real estate. Some of the most expensive neighborhoods in London include Mayfair and Knightsbridge and Kensington and Chelsea. Number 3 is China. As one of the fastest growing economies in the world, it's no surprise that China is also becoming a hub for luxury real estate. Many wealthy Chinese buyers are snapping up properties in major cities like Beijing and Shanghai, as well as more affordable second-tier cities like Shenzhen and Hangzhou. And with the recent launch of China's first ever millionaire city, Zhongshan, there's sure to be even more interest in luxury real estate. So while the top 5 cities for luxury real estate investment in 2022 were New York, number 1, London, number 2, Hong Kong, number 3, Singapore, number 4, and Dubai, number 5, in 2023, it's looking more like it could be the United States, number 1, United Kingdom, number 2, China, number 3, Canada, number 4, and Australia, number 5. There's no doubt the current economic climate has made many people more cautious with their spending, and as a result, they're more likely to invest in properties that are going to appreciate over time in well-located areas that have been increasing in value rather than in low-priced properties that may lose value. Overall, the pandemic has had a positive effect on the luxury real estate market. Sales are up and prices are expected to continue to rise in the coming months and years. Even though we're feeling a bit of a pause now, pretty much everyone still says the demand is strong, the inventory is still in limited supply, and that means it's still going to be a bit more of a seller's market and not quite as balanced yet as we'd like to see. Although with more people getting concerned about their home maybe not catching top dollar, we are seeing more listings come on, and that's helping to balance out some of the differential between supply and demand, more so than we've seen in a while. Although we were talking about a lot of people paying with cash, I do think that interest rates play an important role in investor psychology. And should we see rates be able to stabilize or trend downward at all, which many people are predicting, we would see another rise in values and in affordability as people are able to qualify a little bit more easily. So we'll keep monitoring the situation and reporting into you along the way. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified of new podcasts as soon as they're available. And don't forget, all of my podcasts are over on my website at lindapjones.com/podcasts. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.